So as traders, we all make stupid mistakes, or at least it is obvious that they were mistakes after the fact. The question is, why do we do it? If we're going to solve those problems, we have to understand why we make the mistakes in the first place. I'm going to review some of those things this week. Plus, we're going to analyze the markets for the week ahead. We'll look at the stock markets, the currency market, the Bitcoin market, some of the commodity markets. And then I'm going to look at the day trade of the week on ZKIN. And we're going to do a little different market scan this week, show how you can identify some opportunities on stocks that have been weak in the short term, but strong in the long term. That's all coming up. All right, so what are the common reasons why traders make mistakes? Well, for everyone starting out in trading, mistakes are made simply because of inexperience, not knowing how to trade the stock market. See, the problem with trading is that there's really no barrier to entry. Anyone can become a trader. You just put money in a brokerage account and you are a trader. But that doesn't mean you know what you're doing, and it takes a while to learn how to overcome fear and greed and some of the things that happen to us with the fear of missing out and that sort of thing. But once you've got your skill down, perhaps you are a fundamental trader, perhaps you trade off of level 2 screens, perhaps you're a technical trader or an algorithmic trader, whatever your approach, once you've learned how to do the mechanics of trading, there are still mistakes to be made. And those tend to come because of our emotional attachment to money. Most of us don't like to lose money, and we like to make it. And so the fear of losing or the fear of missing out are big reasons why we make mistakes. We also tend to have this emotional attachment to money, which brings out our emotions. And that is where there's this little part of our brain which really does us a disservice. Because when we feel danger, when we are at that point where we are afraid of losing money or even afraid of missing out on a great opportunity, our thinking brain turns off and our fight or flight brain, that little part of our brain called the amygdala, turns on, and we do not think anymore. And that is why when you're looking at your trades with the benefit of hindsight, so in the evening when you're going over your day trades, or at the end of the year when you're going over your position trades, there will be some that you look at and you'll ask yourself, what was I thinking? Why did I do that trade? And it's likely that you simply did it because your thinking brain had turned off, your fight or flight or the reptilian brain had turned on, and you were doing something to survive instead of something smart to make money. So as traders, what we have to do is have a written trading plan so that when that thinking part of our brain turns off, we have something in writing to go back to. We need to learn to breathe, especially when day trading. To breathe, and what I tell my students all the time, is chill, relax, think, slow down. Don't let that amygdala, that reptilian brain, take over. You need to be calm and really treat trading like a video game where you really don't care whether you make or lose, because if it's a video game, there's nothing really to lose. You just hit the reset button. And that's kind of how you have to approach trading as well. It's really important to keep your emotions out of it. Don't take more risk than you can handle. Make sure that you are trading with only the amount of risk that you sleep well on at night. And go back to that written plan. Practice. Slowly desensitize yourself to risk so that you always favor the thinking part of your brain. All right, hopefully that's helpful. Now let's get on to this week's market analysis, starting off with the US markets and the S&P 500. And we continue to have quite a bit of volatility. I want everyone to notice right about here forward. So look at the amount or the height of the candles in this range. They're relatively short compared to these. And what we're seeing is this increased volatility. Now, the market isn't trending down. It's not really trending up either. It's fairly choppy. But when we have all of this volatility, what that really indicates is that investors are uncertain. The buyers and sellers don't really know with conviction whether they're right. And because of that, we get a choppy market. Get a couple days up, then a couple of days down, perhaps even just a few hours up, and then a few hours down. And so that makes it difficult to trade because you can get whipsawed out of your positions. You can get suckered into buying a stock on a breakout that never has any follow through. And so you need to change your approach a little bit right now where you're not as patient with anything. If a trade isn't working, dump it. If a trade is working, watch it closely for an exit signal because it's likely that in 2 days it might be going the other direction. The market is quite different right now. It's this choppy, uncertain market. The long-term trend is still up. And if we look at the longer-term weekly chart, you can see that the upward trend is still well intact. So that's good. But we did hit a new high this week and closed below our open. And so I think there's a good chance we pull back a little bit in the short term. However, as long as this upward trend line isn't broken, we're still relatively healthy and we still want to favor the buy side. I don't see any reason to panic, but it is a little bit of a choppier market, so trade it a little differently. You know, a month ago, 6 weeks ago, it was better to be patient with your winners, to let them work. And even the losers often rebounded the following day because the market had a general bias to the upside. Well, we're kind of missing that right now. So be a little bit more aggressive on the exit and fussier on what you do take. All right, let's take a look at the NASDAQ 100. And here you can see quite a divergence between the NASDAQ and the S&P. The NASDAQ has made a falling top. Remember, the S&P actually hit a new high this past week. Well, the NASDAQ did not. It is still quite far below its highs, and it broke down on Thursday from a falling top. And that's a bit ominous. I think we may see the NASDAQ pull back farther. Will it break the upward trend line? Possibly. Certainly it is possible because we have built that falling top. It hasn't happened yet, so don't be overly concerned. But I think more importantly, be very cautious about what you buy right now because the market doesn't look like it's helping. Looking at the Russell 2000, which is our small cap sector, it did manage to hit new highs and is pulling back from new highs. So it looks healthier than the NASDAQ. The upward trend is still intact, so that's good. We had a little bit of a close above the open, so fairly favorable. The big volume on Friday, don't read too much into that because it was quadruple witching. And so there's a lot of options unwinding on the third Friday of the quarter, which was this recent Friday. And so that's why you get a lot of volume. It was a relatively quiet day in the market, except for these big bursts of volume at the start of the day and at the end of the day as the options positions are unwound. Looking at the Canadian markets, we have the T.XIU, which is the TSX 60. And it also broke down a little bit on Friday from a short little falling top. Not overly concerning, but still not as good as if we were at new highs. We did sort of break this little upward trend line. The longer term trend is still okay. If we look at the weekly chart, you can see that the long-term trend is definitely intact. And until we start breaking that long-term trend line from a falling top, I wouldn't be too worried. Looking at the TSX Venture, which is our micro-cap stocks in Canada. And here's your upward trend line. We essentially pulled back to that, bounced. The question now is, do we break down through the upward trend line from a falling top? That would be an early end to the speculative season for stocks. Normally it runs from November till Mayish. Well, we're starting to see a little bit of weakness here. There hasn't been a breakdown yet, but there could be. So we have to watch that fairly closely. If instead we hold the upward trend line and move to new highs, well, then the party is still on and the market can continue higher. But I want everyone to be fairly cautious because we are threatening the break of an upward trend line from a falling top. On to the currency market. There's the US dollar, and I talked about how it was breaking its downward trend line a few weeks ago from a rising bottom. That's a reversal pattern. It's slowly building a base, slowly stabilizing after weakness that goes back to the spring of last year. So for about a year now, the US dollar has been fairly weak. Well, it's starting to turn, starting to build momentum, and we'll see if that materializes into an upward trend. But I do think that the US dollar has decent potential to move up in the months ahead. Now, the Bitcoin market is very different looking chart. You can see it's in a good long-term upward trend, but it's very volatile. We run away, we pull back, we run away, we pull back, and we've been running away. Last week, I was a little bit concerned that it might pull back to the trend line, having made a falling top, but it actually was fairly decent this past week. And so it's still a bullish market. I think it's pretty overbought, pretty risky. And so I'm not eager to be a buyer here. But if you are a holder of Bitcoin, then I think it remains a hold until we break the upward trend line from a falling top. I would stay optimistic on Bitcoin. All right, and then finally on the commodities front, we've got gold, which has been weak for about 8 months. And I think it could bounce here because it is at some support at the upward trend line. It's trying to do that. We've had a couple of weeks in a row where we've closed above our open, but we are still below the downward trend line, and we're basically right at the long-term upward trend line and a little bit oversold. So I think we may just see a couple more weeks of strength, but then I worry that we'll ultimately hit this resistance at the downward trend line, roll over, and break the long-term upward trend line. So I am only, I would say, neutral on gold, slightly negative perhaps, something to not get too excited about until we can start to build some optimism. Now, oil had, kind of a parabolic move to the upside. I talked about this last few weeks, how oil was sort of due for a pullback because prices were running away from the trend line. Well, we got that this week. We had a pretty strong down day, and everyone said, oh, the party's over in oil. We're finally getting back to reality. But the chart doesn't say that. The chart shows that we are still in the upward trend. All that happened was price ran away from the trend line, got a little bit too emotional, a little bit irrational. We have a sharp pullback. Everyone runs for the exit door to take profits at the same time. But until that trend line is broken, we should remain optimistic. And that's how I would look at the oil market. Still optimistic, but perhaps in the short term, there may be some chop going on as people sort of rationalize the gains that have been made lately. And then finally, the fear chart. Fear is low. We don't have any great concern in the market. That can change very quickly. But for now, I would basically say that investors aren't overly concerned. All right, so looking at my ratings then, bullish on the long-term time frame for US and Canadian stocks, but with the US market, I'm still neutral. Bullish on the Canadian side. Gold, neutral long-term, bearish short-term. Oil, I'm still bearish on both time frames. Despite that big day of weakness last week, the trend lines haven't been broken. So we can still remain bullish, but with a little bit more caution perhaps, because we could break the upward trend line, but that hasn't happened. Increased volatility, which we've seen recently, really shows that investors are uncertain. And that makes it harder to trade and harder to find good quality opportunities. But realize that this is an important part of an upward trend. You cannot continually go up day after day after day without periods like this. These sort of pullback periods are what build the base for the next upward move. And so I think we can expect some continued short-term volatility, but with that longer-term trend remaining up, I would just remain optimistic until the trend line is broken, remain optimistic. Now, gold is trying to fight that longer-term trend reversal as it is right at the upward trend line, and oil is going through a little bit of profit taking, but it's not particularly negative yet, and as I said, fear is low. All right, so now we're going to take a look at the day trade of the week. And this week, I want to show a day trade that did fairly well on Friday, but by the end of the day, it had given back most of its gains. And that's kind of the lesson that I was talking about at the top of the video today, where you want to be more aggressive with your exits. Be less patient when a stock starts to give some sell signals. We want to take the money off the table. I often refer to this as a Steve Miller selling strategy because, of course, Steve Miller sang the song, "Go on, take the money and run." And that's the style of exits that we want to use right now because the market trend is not helping. So ZKIN on Friday gave our action candle at the open. It had alpha volume, so it has all of those things that I teach and talk about all of the time. Of course, if you want to learn how to pick these things and how I find them and my algorithms and all that stuff, go to the Stockscores website in the trader training area. There's videos there and lessons on that. The important thing for us this week is that ZKIN surprised the market with strength and abnormal volume. And that's the key things that we look for. So there's the abnormal volume, the abnormal strength, surprise because the stock was pretty boring coming into Friday. And the stock made a quick move up. And we had our first sell signal there on a break of the upward trend, but there's no falling top. So that's not a real strong sell signal. But then later we had this breakdown right here from a falling top. And so that tells us that the sellers are gathering momentum. Here's how it works. The buyers push up, they hit a new high. The sellers push down, the buyers fight back, okay? The buyers fight back, they push it up, but they can't make a new high. So if you think about this in war terms, the sellers are slowly getting stronger. And then you get a breakdown from a falling top, and that led to the slide lower. Now, if you sold there on the breakdown, you made 4 times your risk. If you do what I would normally do, which is hold until the close, which I would do in an upward trending market, well, that +4 or +8 that it was earlier in the day turned into something less than a 1 RR. If you look at the economics of the trade, for this particular risk amount of $100, you would buy 210 shares. That's just under $2,300 in capital, but of course you can margin that 3 to 1 if you so desire. So you're putting up $760 of capital. At the end of the day, it had made 0.7 RR, which is nothing too exciting, although it's still a 9% return. However, if you had sold up in here at +4, well, now you're making a $400 return on every $760 of capital put up. That's a much more impressive return, over 50% gain on your money in just a few hours. But you have to Steve Miller it. You have to take the money and run, because that's the kind of market that we have. All right, now I want to jump to the Stockscores market scan and show you that you can actually build your own scans. You don't have to use the presets. We can create our own market scans using a concept. So what I thought I would do this week is use the concept of buying stocks that are in good long-term upward trends, but have been weak in the recent past. And they may simply be pulling back to their upward trend line where they should bounce and continue higher. So essentially what we're trying to do here is buy weakness in stocks that have long-term strength. And this is particularly good right now because we have a lot of NASDAQ stocks which have been strong for a couple of years, but maybe weak for the last month or 6 weeks. So we're going to jump into the market scan tool now on Stockscores. Of course, you have to be a member of Stockscores to use this tool. I actually don't want to have thousands of people using it, so that's why I require that you have to have completed one of our courses in order to use it. I just, don't really want thousands of customers. I'd rather have a small number of people that have access to the tool, and that's why there's a barrier to entry. All right, so what I want to do is use the Stockscore sentiment score to basically see stocks that are long-term healthy. We're going to set that to greater than 60. The other thing I want is stocks that have been weak in the short and medium term. So I'm going to take my medium term average and my short term average and set those to bearish. Then I want a stock that was up on Friday. So we're going to say a gain over the last 1 day of something greater than 1%. And I want what we call a bullish candle, which means the stock closed above its open on Friday. Now we're going to set a minimum number of trades so we don't get really illiquid stocks. So I'm going to set this to 1,000, and then we're going to run the scan. Now if I wanted to, I could give this scan a name. I could call this, pullbacks, and then click on Save Scan. Yes, run the market scan. Now when I go back to the tool in the future, it'll be there as one of my saved presets. Now, as always, we take our results. There was 23 stocks found, and I can now inspect the charts. And what I'm looking for in these charts are stocks that are in long-term upward trends that have pulled back to the trend line. So here's a stock that was in a long-term upward trend, but its pullback is too much. It's actually broken the upward trend line. Here's a stock that is in a very long-term upward trend. On the weekly, that would show up, but I don't really feel like it's pulling back. Well, it's almost there. I guess you could draw a line across these bottoms. It's almost at that trend line. To me, this isn't exactly what I want to see, though. I'm going to try to find you a good example of the kind of pattern I'm looking for. Here's one right here. All right, so let's take a look at precision drilling. I'm going to blow this up, and we're going to draw a line across the bottoms. There's our trend line. And notice the stock runs away, it pulls back, runs away, it pulls back, runs away, and it's pulled back again. And notice that when it pulls back, it bounces and moves up. Pulls back, bounces, and moves up. This is kind of like the Bitcoin chart. It keeps running away and pulling back. So what we want to do is be a buyer when it's at the trend line, expecting that the trend is going to hold and it maybe can bounce and continue higher. So PDS, precision drilling, is one that's in that sort of situation. Now I can continue to move along. Here's another one that looks not too bad. Here is the upward trend line, and we're sort of right at the upward trend line right now at $26. The question is, will it bounce and be able to break through 28? What I don't like about this one is that it's hit this $28, $29 level once, twice, 3 times, hasn't been able to break out of that. So this to me is a little lower quality than precision drilling was. This one, don't particularly like that. You know, it's a very particular pattern that we're looking for. It's that run away from the trend line and the pullback to it. Here's a decent one, SGMS. It's in this upward trend line. You're buying weakness, short-term weakness, in a stock that has long-term strength. You're basically trying to buy the stock on sale, a good stock on sale. And there's a lot of NASDAQ stocks that are maybe on sale right now. I think they could get cheaper still based on what we looked at with the chart. But that's something to keep in mind in the weeks ahead, because some of those long-term strong stocks may bounce off of their trend line and be higher a month down the road. Well, hopefully that's been a useful and insightful Market Minutes. If so, please click on the like button, subscribe to the channel, and most importantly, next week, trade well.